it is being recorded now, and it will be sent out to you tomorrow, so you can listen to me even more. You know, it's worth keeping me on file apparently. So right, we're going to get started then, everybody. So before I start, I just want to give an introduction to who I am. So I know some of you may know me, some of you might not have had anything to do with me, but I'm the program manager here at Premier Training. So I basically manage everything that happens at Premier Training, and I've got responsibility of the AAT course and other courses that we run as well. And I've got 15, 16 years teaching experience, pure teaching AAT. Also got my own accounting practice as well, and I'm also an examiner, so I actually write exam papers. I don't write them for AAT, I write them for another examining board. So hopefully you'll be able to pick my brains and get a lot out of it and go and pass this exam with flying colours. So this first lesson is just basically it's revising what you've done at the foundation level. Okay, so I'm assuming you've all done the foundation level. However, I'm not also assuming, because I'm going to take you through it step by step. Okay, so please, I am very, very passionate about teaching and about accountancy. If I go too fast, or you need clarification, or you've got questions, that's what I'm here for. Okay, please don't think there's any silly questions, because there's not. All right, I'm here to support you. I'm here to get you through exam, and hopefully that's what we will do together. You will have also seen when you've probably logged onto your my PTA, that you'll all get changed to me as your tutor. Okay, and that's purely because I want to mark your assignments, and I want to give you feedback and get you through exam. Okay, so my working hours are normally Monday to Friday 9 till 5, but then obviously I'm doing these as extra on an evening. If you ever need to have a conversation with me, cheers Liz. Oh, it's all right, thank you. If you ever need to have a conversation with me on an evening, if you just let me know, I can either arrange to stay, or I will give you my mobile number, and we can have a chat. So please don't ever think that you're going to be on your own, because you're not. This is Premier Primes, what I've introduced to ensure that everybody is successful. So hopefully tonight you'll go away and you'll feel that you've made the right decision. Okay, let's get started then, everybody. Okay, I will once my pen gets going. Let me make sure I've got my pen on the right thing. Okay then, so when we're talking about advanced bookkeeping, okay, we've done bookkeeping transactions now, we've done bookkeeping controls, we're now looking at what the advanced bookkeeping is, okay? And what we're actually looking at is how we move on, and what do we have to do to start preparing accounts, okay? So this evening, I will always take you a little bit further than the knowledge that you need. And the reason behind that is because I feel with accountancy and bookkeeping, it's not difficult. Trust me, I'm not very academic. I find studying very, very difficult. And when I do study, I have to put a lot of time and effort in. So, yeah, I've got a couple of degrees now, and the last one were a BA honours, and it were hard. It were very, very hard, because I'm not an academic person. So the reason why I teach the way that I do is, one, it's logical, and two, it basically follows an order, so it starts to make sense. Okay, so I did send everybody a copy of a lesson plan. Okay, like I said, it's not set in stone. There might be one lesson, like say lesson 2 or lesson 3, that we don't get everything done, and I said, right, we're going to change it a bit, and next lesson we'll carry on. It's just a guidance, just to show you that I'm going to be covering everything. The one thing I won't do for you, okay, is you've all got the advanced bookkeeping book, okay, which is a fantastic book, but I'm not going to read it to you, okay? So what I'm doing is I'm taking out the areas that are important, and then you will go back and you'll read the book, and you will also work on the chapter activities at the end. Okay, and I really I can't stress enough that it is important to do that, to ensure that you are getting a full understanding. If there's anything then that you still don't understand, that's what I'm here for. Okay, so we're just going to look at accounting and what happens in accounting and how do we build up to doing accounting. And we all know that when you're doing accounts, the information that you get is actual and factual information. So what we're doing is we're recording that financial data. Everything's to the penny, everything's correct, and everything's happened, okay? Or if it's happened and we've not received an invoice for it, there's things that we've got to do. Okay, so it's all about recording the data. It's also what we call the accrual accounting concept, or the accrual concept. And basically what it means is when I do a set of accounts for a client, it's really important that I put in everything that has happened during that financial year. Okay, and there could be things that they've paid for and they're not going to get benefit from it until next year. So for instance, they might pay rent quarterly, okay, and part of that rent might relate to next year. If it is, that's what we call a prepayment, and we're going to come on to them next week, I think it is, or week after. Nobody likes them, but we'll get on to that. So when we talk about accrual accounting concept, it means that it's happened, and it's happened in that year, and we've got to account for it in that year. So we only put through things that we have paid for that relate to that year. We only put things through that we are still owing. So you could have a rent invoice, for instance, that you've not paid yet, but it relates to that year, okay? So when we talk about accrual concept, you've got to think about, does it relate to that financial year? If it does, it's got to be entered, even if you've not paid for it, even if you've not had an invoice for it. So a good example, things like advertising campaigns. Okay, you might have had an advertising campaign that's been running for a year, and you've not received the final invoice, but you know that you've got to, you know you're going to get that invoice, okay? So you've got to make adjustments in your accounts to account for that, because otherwise you're going to either over or understate profit, okay? And we know that the tax man wants us to pay the tax due in that year, okay? So that's what we mean by accrual. They've got to be accurate, okay? You can't do somebody's accounts and just say, oh, well, I've just made them up because, I know you don't want to pay a lot of tax, okay? That's unethical. So they've got to be accurate. I've got clients that don't keep full records, and we have to do either incomplete records and I have to build it up, or they have to sign a disclaimer to say that this is the information, it's true, it's fair, and it's come from other sources like the bank statements or whatever, but it's got to be accurate, okay? So that's the importance of when we talk about bookkeeping. Make sure that you've saved your receipts, otherwise we're not going to be able to put your accounts together, okay? But not everybody saves everything. The next thing is they've got to show, what we call a true and fair view. Okay, so if you know that you're entering everything that you possibly can that has happened in that year, everything that you've paid, everything that you know you've got to pay, you've taken out anything that you've paid in advance for previous years and for future years and so on, then it will show a true and fair view. And what we're trying to do is, like I said, we're not trying to over or understate profit. We're trying to say these accounts are true. This is what's happened. We've made adjustments for whether it be depreciation, accruals, prepayments, bad debts, anything like that. And these accounts are as good as I possibly can get them. And that's what we mean by true and fair view. The accounts are correct. Then we've got to look at how we prepare the financial statements. So the first thing that you should have all done if you've done the foundation level, the level 2, is you'll know about the trial balance, okay? Your trial balance is basically your starting point, because that's showing that yes, the accounts of the transactions have been entered, yes, it's correct, and from your trial balance then you'll be able to make your adjustments and then go on to prepare your financial statements, okay? So everything that you're doing is to prepare for them final accounts, to be able to complete them final accounts to submit to Inland Revenue and Companies House if it were a limited company. Okay, so the financial statements that you're going to get used to is the statement of profit and loss, also known as the income statement. Okay, and this basically shows the profit or loss that the business is making. Okay, and what I'm gonna do tonight is I'm gonna take you through how we build a profit and loss and how we build a balance sheet. Okay, now it's not necessarily going to come into this unit, but you're going to be asked to do the adjustments to prepare the accounts. You've got to know what goes in each financial statement in this exam, and then in your next exam it'll carry on and you will be preparing some final accounts. Okay, so to me it's logical to show you now so you get a taste for it, so when you come to do the, I don't know if it's assignment 2 or 3 of ours, you know exactly what goes on each financial statement. The next one is what we call the statement of financial position, also known as the balance sheet. Okay, now each one of them tells you a different story about the business. Okay, because the business could be a fantastic profit making business, but on the balance sheet it might not be financially viable because it's got a lot of creditors, or it's got a lot of liabilities that it owes out. Okay, so it might actually not be solvent although it's making a profit, because you can have some fantastic profit making businesses that go into liquidation because they're not solvent. Okay, and that basically, when I talk about solvency, it means you've got the ability to change either stock or get money from your bank, get your customers to pay you, your creditors, debtors to pay you, so that you can pay off your debt. Okay, so if you can generate the liquid asset of money to pay off your debts, then the business is solvent. Okay, so that's what I mean by solvency. You've also got to know about capital, the difference between capital and revenue transactions. This was a question in BTRN, I believe it is. Okay, and this is an area that students keep failing on, and purely because they're not, I suppose they're not thinking about it. Okay, so what I want you to do is, as we go along, I really want you to think about it, and this will test you in assignment 1. Okay, because at the end of this evening's class you will be able to complete assignment 1 for me. I know some of you have completed the assignments a long time ago and you're probably just coming back to studying and you're starting afresh. If that's the case, then I will have cleared your results from your timetable, and I really want you to do them again. Okay, based on what you're learning now. Don't look back at the answers, do it based on what you're learning now. Okay, and what I've done today is, I don't know if any of you are aware, but on the AAT study support, you've got your examiner's report. Okay, now these are an absolute godsend. These are really important for you to read. It gives you an idea of where students are struggling, okay, and where they're losing valuable marks. And the first thing that I read is that students are struggling regarding the understanding the how to capitalise an asset. So what's revenue and what's capital? Okay, now it's things like that really should be gaining you full marks. All right, so we're going to go through that, and I'm going to make sure that you've got a good understanding of that. So I want you guys to make sure that you come back with a very high grade. So no pressure, no pressure. Okay then, so let's have a look at financial statements. Okay, So your trial balance, like I said, your trial balance is your starting point. Okay, so we all know how to complete a trial balance. Okay, we all know that a trial balance must balance. If it doesn't, we should all know that we've got to open a suspense account. But we should also know that a suspense account can't be kept in the accounts. It's just going to be something that's there until we work out the errors. Okay. Now, can I just ask, did everybody do the foundation level? Yeah, brilliant. Okay. Well, I'm gonna go back over it like I said tonight, just to get your brain juices flowing again. But your trial balance is really the one thing that shows you that yes, it does balance. However, you should also be aware that there's errors that don't show that it balances. So things like errors of omission, errors of commission, error of principal, um, error of reversal, compensating error, error of original entry, they won't show that there's an error in the trial balance because they both balance. Okay, and if you've omitted something, it's not in there anyway, so there's nothing for it to have an imbalance against. So there is certain errors that won't be shown, but then there are errors that will be shown, and the errors that will be shown are the ones that have caused an imbalance. Okay, so your debits and credits don't balance. It could be the fact that you've totaled up your sales day book and you've got, I don't know, the net amount incorrect, which means that your sales account doesn't balance to your VAT account and to your sales ledger control account. So there's always reasons, and it's using your expertise and your knowledge to work out exactly how to correct it. Okay, and what will happen in this exam is you will be told that these are the errors that have occurred. You've got to decide which ones need adjusting. Okay, and we'll talk about that as we start moving down Weir's lessons. Okay, so your trial balance, your starting point, and we're going to do a bit on this evening. Then you've got your statement of profit or loss. So your statement of profit or loss basically shows your income and expenditure to get your profit, because your income less expenses gives you your profit. And I've got one that I prepared earlier, which you've got in your PowerPoint, which we're going to talk through. Then you've got your statement of financial position. Your statement of financial position is basically your accounting equation. Assets minus liabilities equals your capital. Okay, and the reason why I liked it when we used to call it balance sheet, we're now using international terms, statement of financial position, because the balance sheet said it had to balance. Okay, so I always looked at it from the top half of the balance sheet to the bottom half. The figures have got to balance. Okay, so I quite liked it when we called it balance sheet, but terminology now tells us it's statement of financial position. Okay, so they're what we're going to be looking at. Okay, but first of all, we've got to remember as acronyms. Okay, this very first assignment you're going to do is all about double entry, entering things into your account and making sure they go in the right account. So that's a clue. All right. So your first one is pearls, my favourite. Okay, so purchases is a debit, expenses is a debit, assets is a debit. Now, I need to clear this up from day one. Okay, purchases are goods that you've bought that you're going to resell. So if I'm a mobile phone shop and I've bought 1,000 mobile phones, they are my purchases. If I'm a mobile phone shop and I've bought a mobile phone for use in the business, it's an asset. Okay, it's office equipment. Okay, that needs to be clear from day one. So purchases are the goods that you've bought to resell. So all I'm going to set to you is RTFQ. Read the flipping question. All right. And you'll know why when you come to assignment 1. Okay. Expenses then, there's thousands of them. So you've got discounts allowed, you've got light, heat, wages, rent, rates, telephone. The list is endless. And then you've got your assets. And remember, there's 2 types of assets. There's your current assets, which are basically amounts that are going to change on a daily basis. So inventory, stock, okay, that's a current asset. Trade receivables, which are your debtors, the customers you've sold to on credit, they're a current asset. Your bank account is a current asset if it's not overdrawn. Your petty cash is a current asset because it can never be anything else. It can either be 0 or you've got money in it, which means that it's a current asset. You're going to have prepayments that are current assets, but we'll talk about them later. Okay? Then you've got your non-current assets, and these are the items that you buy to use within the business. So it could be a computer, it could be my screens behind, it could be me microphones, it could be my laptops, it could be me, I don't know, my motor vehicle, it could be my printing machine if I am a printers, okay? So a non-current asset is something you buy to use within the business that's going to last longer than a year, okay? Is everybody okay with that? Excellent. Okay. And the reason I'm saying is everybody okay with it is because there's a question on assignment 1, and if any of you get it wrong, and I think it's a gardening company. Okay. So, okay. I'm a gardening company and I bought some flowers that I'm going to use in my customer's garden. Okay. Because I'm going to put them in my customer's garden, it's revenue expenditure because I'm going to use them within my customers, okay? If I bought a wheelbarrow, it wouldn't be a purchase, okay? Because it'd be an asset to me. So it'd be equipment or something like that, okay? Whatever I decide to call it, okay? So if I'm using it within the business, it's equipment. If I'm giving it to my customers, it's purchases. So that's a hint, okay? Then we've got revenues, okay? So revenues is basically other money that's coming in from other things other than sales, okay? So things like discounts received. Discounts received is other revenues. So you are receiving that money from your suppliers because you don't have to pay them. All right. So the revenues are really, really important because anything that you're receiving, so bank interest received is other revenue. If you rented out an office in your offices and somebody paid you rent received is other revenue. So anything you're receiving except trade receivables, because that's an asset to you, any other income that's coming in is classed as revenue. Then you've got your liabilities, okay? So you've got current liabilities, which means that you owe somebody the money and it's going to be paid for within a year. So things like your trade payables, your creditors. If you've got a bank overdraft, that's going to have to be paid within a year. If you've got a short-term loan, that's going to be paid within a year, okay? That's what we call a current liability. A non-current liability means that it's going to be over a year. So things like if you've got a long-term bank loan, okay, or a mortgage, anything that's over a year is going to be a non-current liability, okay? And then we've got the lovely sales, okay? Now, I always use pills because it's simple. because the way that my mind thinks is that if I know sales is a credit, sales returns got to be a debit. Okay? If purchases is a debit, purchase returns has got to be a credit. Okay? Now that's just the way that I think. I like it to be easy. My students used to say to me, Sam, can you tell me in simple Sam's terms? Because that is what I like. Okay? Your pill stays with you, whether you're on level 2, level 3, level 4, or you're going into ACCA or CIMA and you're working in real world, pill stays with you. Okay, so also remember, whatever side it goes on in the using pearls, your VAT goes on the same side. Okay, so if you've got purchases with VAT on it, in the VAT account it would be debited, same as purchases. If it were purchase returns, which is a credit, the VAT would be credited. If it's a sale, which is a credit, the VAT on sales would be a credit. Okay? If it's an expense, which is a debit, and there's VAT on it, the VAT on the expense is a debit. Okay? So just think about it. Keep it logical. Keep it easy. We like simple. The other way is dead click. Tells you exactly the same thing, but the reason why I probably use this one, or some students do, is for the final bit, which we'll go into. So you're debiting your expenses, which we've gone through. Your assets are exactly the same as we've gone through, but on this one you've got debit for drawings. Well, I don't use this one because my brain tells me that D drawings, D debit. Okay, so I've never used this one. And drawings is money that a sole trader, the owner of a business, so my business is a sole trader. So if I take any money out of my business or any goods out of my business, they're classed as drawings to me. Okay, and the reason why we do it as drawings is because when we do a tax calculation, we have to add all that back in. Okay, because we've still got to pay tax on them drawings. Then you've got your click, which is your credit, your liabilities, your income, which is same as your revenues and your sales, and your capital. And your capital is money that you, as a sole trader, have invested into the business. And it's a credit because the business owes you the money back, similar to a liability. Okay, but we keep it separate because the owner's capital is money that we've invested. So when I set up my accounting practice, I had to buy the software, I had to have some printing done, I needed my laptop, So I put the money in, so the business owed me that much money that I sent out. Okay, I don't use that for capital because I use C credit capital. So it's just a little bit easier for me to understand, but whatever works for you, you use what works for you. Okay, is everybody okay so far? I do get a bit excited. Excellent. Okie dokie. So at least none of you fell asleep yet. Okay, so this is an example of a statement of profit or loss. Okay, now what you've got is, you've always got at the top, yeah, your sales. Okay, so your sales always comes first. Now what you need to do with this is, I know when I was studying, I used to have like big posters and I used to stick them on wall to try and work out, because we actually had to remember where everything stopped or where everything were posted, because I qualified in olden days when it was pen and paper. Where now, you see, you're given like a pro forma and you've got to be able to know what goes in the boxes and then under which column. This is a 2-column one. You can sometimes have a 3-column. Okay, and I'll show you why you have a 3-column in a minute. Okay, but you've got your sales and then you've got minus your sales returns. Okay, it can just, in the exam, it can just give you one line. Okay, so don't panic. What you've got to do is you've got to net it off. So you've got to have your sales less your sales returns, and you just put that one figure in this box, okay? So please don't, don't panic. I need you to think about it and think, well, if there's just one box, I've got sales and sales returns, you know you've got to take them off each other. Just put that net figure in, okay? If it gives you two boxes, then you can show it as sales less sales returns, and that would give you then your net sales. This next bit then is what we call the cost of goods sold, or it's also known as the cost of sales. And basically what this bit's telling us, so what this area is telling us, is what has it cost me to make these sales, okay? And the reason for that is, think about it. If you're, let's think that we're all bakers. I'm definitely not a baker, I can burn chips, me. But if we were a baker and we were making Christmas cakes, one of my friends has started making Christmas cakes. So she put a picture on Facebook yesterday, the 100,000 eggs that she's got, the flour, the sugar, all the raisins and currant, everything that goes in it. I don't like Christmas cake, the brandy, whatever, okay? So if she started with that, that's what we call opening inventory. It's her opening stock, okay? So that's what she's had in a storeroom or whatever, that's her opening stock. Then what we've got is she's then gone and bought extra ingredients. So she's gone and bought a fresh eggs or whatever. So your opening stock plus your purchases. But then what's happened is some of her flour has got black little maggot things in because it's out of date. So she's took some back. So your purchase returns, that's what's gone back. This then gives you a figure. So your opening stock plus your purchases minus your purchase returns. Excuse me. You might have even had to pay for carriage on that. So carriage inwards, think of the word in. Goods that you'll purchase come into you. Okay, so they're coming into the company. So carriage inwards is shown within your cost of sales, cost of goods sold. So you've got to add that on, okay, because that's an expense. So carriage inwards and carriage outwards are both debit entries, they're both expenses, okay? They just go in different parts of the profit and loss. And then you've got closing inventory. So this figure is basically saying this is the stock that I've got left. So I've done everything, I've made these, I've purchased this, I've sold that, and this is what I've got left. There are fireworks here and I can't hear you at the moment. If you ask us a question, oh bless you. Fireworks are driving me nuts and they're driving my dog absolutely spare. Let me just make sure my microphone's on okay. I do sympathise. I don't like fireworks, and my little chihuahua definitely doesn't. Okay then. So your closing inventory is basically the goods that we've got left over, okay? And the reason why that's a negative, we're taking it off, because that is actually, when we come to do a statement of financial position, it is a positive for us, it's an asset, okay? So if we kept it in the profit and loss account, we'd be actually understating the profit, okay? Because we've got this left. So yes, we might have paid for it, but it's an asset to us. We've not turned it into a sale yet, okay? So we can't record it as a sale. We need to make sure that we're keeping it within our accounts, okay? So that's why it's a negative. So when I come to show you how to do the trial balance and put it into the accounts, you'll always see two closing inventories, because you've got one that's coming out of the P&L and another one, this then is going to go in to the statement of financial position. Because remember, everything's double entry. So if I'm crediting this figure, because I'm taking it out of the accounts, I need to debit it somewhere, and I'm debiting it in the statement of financial position. Okay, so that gives me this figure, which is basically my cost of goods sold figure. So my net sales minus my cost of goods sold gives me my gross profit. Okay, and a lot of companies will work on gross profit because they'll say, especially manufacturing, they'll say, I need to make a 50% gross profit, because when they take off all the expenses, it's going to reduce that net profit figure. Okay, so the next part that's really important is this figure, the discounts received. Okay, the discounts received figure is basically other income. That's just an example. You've got discounts received, you've got interest received, it could be rent received. We're going to talk about provision for doubtful debt. So if the provision for doubtful debt has decreased, that's additional income we're going to receive. So anything that is additional income, not part of the trading income, not part of the sales, is shown under gross profit, and it's added on. So you would add those two together to get your revised gross profit figure. Okay. Then we've got, oops-a-daisy, all the expenses. Okay. And the expenses are these hundreds. Okay. Depreciation's one of them, which we're going to be learning about next week. You've got carriage outwards, so this is the carriage that on your sales, so what it costs you, DPD, parcel force, however you've sent it out. Discounts received, light, heat, wages, salaries, rent rates, motor expenses. There's hundreds of them, okay? So it's not, obviously I've not saturated them all because you won't be able to read it. It'd be too small, okay? And that gives me the profit or loss for the year. So if your expenses, your total expenses, which I'd put in here, is higher than your revised gross profit, or gross profit if there isn't any additional income, okay, that means you'd make a loss. So if your expenditure is higher than your gross profit, you've made a loss. If your expenses is lower, you've made a profit. Okay, and that's what it's about. It's about understanding, have we made a profit or a loss? This figure then will be required when you come to do your statement of financial position. Okay, so what you've got to do is you've got to make sure that that's accurate, because some of the figures are going to be followed on and carried forward to your statement of financial position. Okay. So the next part is, this is a 3-column statement of profit and loss. So I'm just showing you the differences, okay? It can be either way that comes into exam. I really don't know. But just use what you've got. There's not much difference. So normally what happens with this is you have a 3-column one because your purchases, yeah, are netted off. So you'd have purchases minus purchase returns to give you the net purchases figure, okay? Or they might have not given you that 3rd column and just enough room to put purchases. If they just give you that, just take your purchase returns off your purchases figure and use the net purchase figure, okay? So again, the top part is the income. Really important. All right, I marked somebody's other day. I can't remember if it was. Oh, we're marking a computerized accounts for the company that I'm chief examiner for, and they couldn't understand how to set up the profit and loss. Okay, so when I marked it, there were actually no income in there. It was just all expenditure. So I'm not sure what they did. But there's a set way of doing it. So your income always comes first. Then it's your cost of goods sold or cost of sales. Then it's any other income. Okay. And we'll be adding to this as we go along with your studies. But think about it. Discounts received, interest received. If there's decrease in provision for doubtful debt, which I'll teach you about, and so on. And then you've got your expenses, okay? And it's basically an income less expenses to give you your profit or loss for a year. All right. So that's just a layout of it. We're gonna do one together in a bit, and you're gonna be filling it in as we go along. Is everybody okay with that? Have you got any questions at all on statement of profit or loss? Trying to keep it simple. All good? Brilliant. Oh, that's what I like to hear. Okay then. So let's have a look at your statement of financial position then. So this one's basically got all the assets and liabilities of a business. So you know when I said earlier about the accounting equation, so your assets minus your liabilities equals your capital. That's basically what we're looking for. Okay, so your statement of financial position shows everything that the business owns or is owed. Okay, so it also shows, so they're your assets, and it also shows what the business owes out. So it shows everything that the business owns is owed and owes out. Okay, so that's what you need to remember. It's normally 3 column. Okay, and the reason being is because this is your cost column, this is your accumulated depreciation column, and this is what we call the net book value, also known as carrying amount. Okay, so the 3 columns relate to the non-current asset register. So your vehicle, your first one is your cost, minus, always minus your accumulated depreciation, which equals your net book value. Now in the examiner's report, when you read it, it will say that students have struggled to work out the accumulated depreciation because they've struggled to work out how many years that they've owned the asset for. Okay, it's really important, this one, because what we're trying to do is we're basically saying that from any information, so if I said I've got a cost of £10,000 for a motor vehicle and I've owned it for 4 years, and my depreciation method tells me that I depreciate at £2,000 per year, I should know that if I don't depreciate it in the year of disposal, so say I dispose of it on year 5, my accumulated depreciation would be £8,000 in total. Okay, so what you've got to do is you've got to gain the skills to be able to work out how much would the accumulated depreciation be. Can you work out how many years it is so that we can calculate the accumulated depreciation? And then from that, you would be able to work out whether the company has actually made a profit or loss on that sale or disposal. Okay? Massive, massive area in this exam. The examiners love it. When I've, marked level 2 papers for an international qualification, we teach this at level 2, okay, and then it leads on at level 3. So it is a big area for examiners to test on. Now we're going to go through it. We'll go through, I think this is on the next lesson, because we do non-current asset register and the acquisition and disposal of assets, but it's really important. Okay, so we'll work through that together, so don't worry too much about it tonight. I'm just giving you an overview of what's in the statement of financial position, but I do need you to realize it's your cost less your accumulated depreciation to give you your net book value or carrying amount, whatever you want to call it. Okay, Then you've got, so these non-current assets, these are the assets that are going to last longer than a year. Okay, so if you're a gardener, it could be your wheelbarrows or spades or whatever. Office equipment, motor vehicles, it could be print. I used to manage a printing company. It was as printing presses and all stuff for his artwork and what have you. Current assets then are amounts that are going to change on a daily basis. So this inventory figure, yeah, it might be £1,000 today, but when I go and make that cake, my stock figure is going to decrease. But if I go and buy some more and my closing stock figure is higher, that figure will increase. Now this figure, this inventory figure, is the figure that comes from here. Okay, so the closing inventory on your statement of profit and loss that you've taken out, yeah, you can see now that it's shown as a current asset on the statement of financial position. So when I said to you the closing stock figure is shown on both, one of them is a negative, so on the P&L it's negative, but on the statement of financial position it's a positive because it's an asset. We own that stock, okay? Then you've got the trade receivables or sales ledger control account balance. So this is the money that is owed to you from customers that you sold to on credit, okay? So when we talk about credit, it means that we've sold or purchased and we're going to pay at a later date. All right, so in here, when we talk about trade receivables, it's owed to you. And because they owe you money, it's a current asset. And the reason it's current is that figure will fluctuate all day, every day, because you'll have people pay you. You'll sell something else on credit. You'll have people pay you. You'll sell something else on credit. Okay, so it'll go up and down all the time. That's why it's a current asset. The bank account, the bank's in there under current asset because it's got money in it. If the bank was overdrawn, okay, it would be shown as a current liability. So the bank is only shown under current assets if it's got money in the bank. Cash is cash, okay? You can't have cash under current liabilities. You've either got cash or you've not got cash. You've never ever got negative cash, okay? I've got 3 kids and trust me, I've never ever got negative cash, okay? I've either got cash in my purse or I've got nothing. I've always got a negative bank account because I'm always overdrawn because they're always spending money, okay? So that's the joys of parenthood. But I've never ever had minus 50p or whatever in my purse. I've either got nothing or I've got cash. So it will never be shown under anything else, only under current assets. So your current liabilities, then your trade payables. So these are amounts that we owe. We've got to pay them within a year. And these are like as creditors. So we've bought from them on credit and we're going to pay at a later date. Other things are if we owe inland revenue money for VAT. There is going to be a couple of other things that go under here, like accruals, for instance, and prepayments. So accrual of an expense is a current liability. A prepayment of an expense is a current asset. But I'll talk about that a different night, because when we have that lesson, make sure you've got well, I was going to say a glass of wine. I've had just that bottle, but save it for after. You might need it. Okay, because accruals and prepayments, I would say that is the one area in this subject that people struggle with. Everything else is pretty straightforward, but I will talk you through it. Okay then, so your current assets, the total current assets minus the current liabilities gives what we call the net current assets. Okay, so one minus the other is the net current assets. It could be that your liabilities is higher than your assets, which means that it'd be a negative figure. I have seen that happen. Okay, but whatever happens, assets minus your liabilities gives you your net current assets. Remember, this is called a balance sheet in UK terms. Okay, and there's a reason why it's called a balance sheet, which you'll see in a minute. So then you've got your non-current liabilities. These are long-term, so you're going to pay these in a year or more. Okay, so things like your bank loan, mortgage, things like that. So your net assets minus your long-term liabilities or non-current liabilities gives you this figure. Okay, and that's what we call your total net assets. So that's what the business is worth. Okay, if that's a negative, it's a bad thing, because basically if it's positive, it's telling me that I can pay, I've got enough assets if I needed to pay my suppliers, for instance. If it's negative, it's telling me that my liabilities are basically higher than my assets, which is not a good thing. Okay, so pretend I'll just draw a line here. Okay, so what you've got to realise now is this is what I'd always call my top half of my balance sheet, and this is my bottom half. Okay, the figures at the bottom here have got to balance with each other. Okay, and the reason the balance is you've got your capital. Remember, these are a sole trader accounts. These are a one-man band. Okay, they're not partnerships. It's just one person's business. So you've got the capital that they've invested plus any profit for the year, which comes from here, from your profit and loss account. Okay, I can't seem to get rid of that. It's driving me nuts. Let me see if no, it won't get rid of it. So that's from your profit and loss account. Okay. So your total net assets and then your total of your finance by section or equity section, as it might be called, have got to balance. So your capital plus your profit for the year or take off a loss less any drawings. And don't forget, the drawings are the monies or the goods that the owner of the business has had out of it. Okay? And that's basically your statement of financial position. So what you've got to realise is that your total current assets less your current liabilities gives you your net assets. And then you've got your net current assets minus your non-current liabilities to give you the figure that has got to balance in the balance sheet. Okay, and that's why I still call it a balance sheet now, even though we've been on international standards for years. Okay, and what it's saying is this now balances, and this is the financial position of that company. And if these two figures are positive, it's a good thing. Okay, it means that the business is basically funding itself and it's got capital that's working for it. Okay, everybody okay with that? Yep. Fantastic. Okie dokie. Okay, right, we're going to go back over double entry bookkeeping, all right? So I've sent you some slides and we're going to walk through it step by step. So you should be able to fill it in as we're going along, okay? The reason why we're going through this is because the advanced bookkeeping unit follows on from what you know. You've got to know your double entry because you're going to be asked by an examiner to, I don't know, enter transaction of buying a new asset or writing an asset off or depreciating an asset, anything. Okay, so remember, when you do these exams, they can test you on the foundation level. That's why it's important to understand that you've got that thorough understanding of double entry. Okay, so everything we're doing tonight, will get you through that first assignment. Okay, I'm not chucking anything in there that's going to throw you, or I'm not leaving anything out that we've not covered. Okay, so we're going to go through it step by step. Okay then, so remember your double entry, there's always got to be at least 2 entries, and the reason why I say at least is because if you've got VAT on it, it makes it 3 entries, but your debit and credits have always got to balance. Okay, so you're going to have a debit and credit entry. We're going to be entering into the main ledger accounts, because remember, it's the main ledger that goes to do the trial balance. Okay, so your main ledger accounts, also known as the general ledger or the nominal ledger, are things like your motor vehicle, your bank, your cash, your rent rates. There's thousands of them. Okay, the accounts that it's not is your customers or suppliers, because your customers and suppliers are your subsidiary accounts. Okay, and your customers, and when I talk about subsidiary account, I mean that you've sold and bought from them on credit, because if you'd paid for it by cash, you wouldn't have an account for them. Okay, because you don't owe them any money. If they bought from you with cash, you wouldn't have an account for them because they don't owe you any money. Okay, so remember, subsidiary accounts is because you owe people money because you've bought from them on credit or you've sold to them on credit. Okay, so just remember that. The debit and credit must always balance, absolutely 100%, because if not, your trial balance won't balance. Okay, if your trial balance don't balance, that means you're going to have a suspense account, which means that you've got some errors in there, which means you've got to find them and you've got to correct them. Okay, so in this exam, you will be tested on correcting errors and correcting the suspense account. Okay, so we will be going back over that. So let's have a look at an example. We've got 5 transactions that have taken place here on 1st of October 2018. It says they're not registered for that, which is great. So it's just something to get us teeth back into and start doing double entry. Okay, so we're going to go through each transaction at a time. Okay, so the thing that you've got to think about is what you're debiting and what you're crediting. Well, when I think of a bank account, I think of it as in and out. So my debit is money in and my credit is money coming out. It's just simple for me. Works same with petty cash account or cash account. So money's going in is a debit, money coming out is a credit. Okay, it doesn't matter which you do first. Okay, so sometimes you can't, it's easy to remember an account. So things like Pearls, for instance, Pearls tells you purchases as a debit. So you might want to debit the purchases account first and then deal with the other account once you've done that, because it just automatically leads to know which account to put it in. So it says here you have put £30,000 of your own money into a business bank account. Okay, well, to me, straight away, if I'm putting money into a business account, the debit is telling me it's money going in. Okay, so I'll deal with that transaction first because I find it easy. What you've got to remember is this bit, the details. Okay, I've seen so many people put details bank. That doesn't tell me where the opposite entry's going. Okay, so if I were Mr. Inland Revenue Inspector of Taxes and I wanted to come and have a look and that said bank, I'd be like, well, I'm looking at bank accounts, so I don't know where the opposite entry is. Okay, what were it for? Where did it go? So make sure the details are where the other entry has gone. Okay, so if I know that's a debit, then my capital, 2 things on this one, is C has got to be a credit, but also I know it's a credit because I put money in my bank and everything's got to balance. Okay, so I need to credit my account. My details are where the opposite entry has gone. So Mr. Inland Revenue's happy because he can check the accounts, no problem. I'm happy because both my accounts balance, because I've got a debit entry and a credit entry, and they both come to £30,000. Okay? Everybody okay with that? Is it all flooding back to you now? Don't we just love double entry? Oh, I'm glad you got a smiley face, Kirsty. All makes sense. Brilliant. Okay, let's move on with next one then. Okay, so now what he's done is he's bought a motor vehicle with his own money. I'm assuming it's a him. That's a bit sexist, really. So they bought a motor vehicle with their own money for 20 grand. Okay, so they've used their own money. So it's not a bank loan. It's not, a loan from Fred Blogs or anything. It's his own money. So we know that if it's your own money, you've got to enter it into your capital account. Okay? So what we're going to do, we're going to credit the capital account, which means then this vehicle is an asset to us because it's worth something to us. It's going to help us generate income because it's a delivery vehicle. So an asset is a debit entry. Okay? Now just be careful with this because on one of the assignments, I know it does test you, and for some reason people wanted to put it in a bank account, or you've got to read what the question actually says. Okay? Nothing else will go in that capital account. If the owner has, paid for something out of his own money or invested it into the business, it will be credited in that account. All right? So just be careful with this and make sure you RTFQ. Read the flipping question. Really important. Okay, the third transaction then is you've got a bank loan. Okay, so you've received a bank loan for 15 grand. Now I have seen this where they've put it into the bank account and then they've credited the capital account. No, this is a bank loan. This has nothing to do with Fred Bloggs, whose business it is. This has come from a bank and it's the bank that you owe money to. So what I would do is I would deal with the debit entry first because I find that easier. I don't know why really, even after, 20, nearly 30 years in accounting, I still find it easier to do that way. And then I'm going to credit my bank loan account. And the reason it's a credit is because it's a liability. I owe the bank the money. Unfortunately, they're not going to give me a loan for 15 grand and not want it back. So I owe the bank the 15 grand. Okay, then it says, and this is an interesting one, and this is one you've got to be careful of because, assignment one, it could trip you up. It says you use 2,500 from the business bank account to pay for rent and rates, okay? Now, in one of the assignments, I know it's not rent and rates, but it's on a very similar thing. And what they do is they basically credit the capital account and debit rent and rates. Okay? It's not. It says that it's from the bank account. It might be that they've used the capital money, and I think that might be it. I think it says something like the capital introduced by the owner has been used to pay the rent and rates. Well, it's not in the capital account. It's in the bank account. So you need to credit the bank account and debit the rent and rates account, and that's where we try and trip you up. Okay, so you're taking the money out of the bank account because it says that it's come from business bank account, and you're debiting your rent and rates account because it's an expense. Okay, so whichever way works for you. I just find it easier working from the bank account and then dealing with other account. In the exam, it doesn't matter. I know in some colleges and other training providers they'll say do the debit entry first. I just think it makes no difference because it's going to balance anyway. So I just found it easier doing the credit entry because I know it's coming out at bank. Okay, Then the final transaction on this one, it says you purchase £9,000 of goods for resale, paying by cheque. Okay, so I know that the money's going to come out of my bank account. Okay, I know when I buy goods that I'm going to resell, Pearls tells me purchases as a debit. So I'm going to debit my purchases account. Okay, really, really simple. But the way that some of the questions can be worded can trip you up. And the reason why we do try and trip you up is because we don't want a world full of accountants. Okay, so this will distinguish between your pass, your merit, and your distinction. So there'll be ways that we can try and manipulate the question, hoping that you might read it wrong, so it might drop you down into a merit student rather than a distinction. It's quite cruel, really, but it's just part of it, and it is down to how you read the question. Okay. All right then. Is everybody okay with that? Is it all coming back to you now? Oh, I'll come flooding back. That's what I like to hear. Excellentio. Fantastic. Okay, we're moving on to drawings now. So this is a big part for a sole trader, really, because it's like when you're running your own business. Obviously, you know, I've got a house and cars to run and what have you. So it's important for me that when a client pays me, yeah, I've got outgoings because I've you know, my computers. I pay a hell of a lot of money for me memberships and what have you. So, but the rest of the money that's left, it is basically my money. So I can take that money out of my business and use it, but I've got to pay tax on it. Okay. So when we talk about drawings, there's different ways in which we can deal with drawings. I could draw cash out, or I could transfer it from my business account to my personal account, and it's classed as drawings. That's one way. But I could also take inventory, I could take stock out. So things like if I were a mobile phone shop and I says, oh, I'm going to take a new mobile phone, that mobile phone's got a value to the business. Okay, and if I'm taking it, then I've got to be liable for paying tax on it. Okay, so if I take inventory out, then I would credit my purchases and I would debit my drawings account because I'm taking goods that I can't sell now. Okay, because it's vanished. I could even take stationery. Okay, so I could turn around and say, oh, I've got some personal stuff that I need to do, so I'm going to take, you know, a few boxes of paper or ink cartridges or whatever. That's still got a value to business. Okay, so if I'm using it for my own use, then that would be classed as drawings, but I'm taking it out in physical goods rather than just in cash. So I'm taking out a print cartridge because when you think about it, I've just bought a full set of print cartridges for my printer at home because I do a lot of printing, especially when I'm marking exam papers. £134. Okay, that's a lot of money. So if I'd got a stock of them, yeah, and I kept going and taking one, yeah, and not using it within the business, I would have to make an adjustment for it because it would be part of my drawings. Okay? And then any other items, anything that you take, your business should be. I know being a sole trader, it is part of you as an entity, but everything that you buy for it, everything that's in it, should be used within the business. So we have to make adjustments for it. You could take all the stock out you want. It don't matter as long as you adjust for it through your journals, or if you're taking money out at bank, you're doing a bank payment. Say, yeah, it's come out at bank, but it's gone into drawings. Whichever way you do it, it doesn't matter. It's your money at the end of the day. It's your goods at the end of the day. So let's just have a quick look at how we deal with double entry then. So on 1st of April 19, the owner of the business takes £500 cash from the business bank account. Again, as you see, I've automatically done the bank account first because I know I credit that account. Okay, but then drawings tells me D for drawings is a debit. Yeah, it's not rocket science. It makes it so simple. Okay. If the owner takes it out then for stationery, okay, so what I'm going to do is I'm going to credit the stationery account, because remember, stationery is an expense, so you would have debited your stationery account. So to make the adjustment then, you're going to credit your stationery account and debit your drawings account, okay, because drawings is always a debit. Because even if it's money that you're putting in, it goes into capital. It's a credit in capital. So drawings is always a debit. The owner takes £500 of goods for their own use. Okay, so let's think of, I don't know, that mobile phone shop. Okay, so remember, purchasers, Pearls tells you purchasers was a debit. Okay. So if I'm taking goods for my own use, I would credit my purchases account and debit my drawings account. Right, there's another way that you could do this. You could actually do it through inventory. Okay, so you might have an account that's called inventory, which is basically stock. So stock would be an asset, it'd be a debit entry. So if they said, make the adjustment through inventory, you would just credit the inventory account. It works exactly the same way as you're doing it as a purchase, but you're doing it through an inventory account instead. Okay? Everybody okay with that? I think it's straightforward. It's just making sure, I like to make sure you're happy with it. Excellent. Okay, brilliant. Okay, so the last bit that we need to go through is just really a reminder of how we post the day books, okay? So this is, I'm not going to go through all the day books. I've only picked out the sales day book and sales returns, I think. You know what I mean? Just to give you a refresher, because if we went through purchases and purchase returns, you'd be here all night and you'd be doing level 2 again. So I've only picked the sales and sales returns day book. So basically what you've got to remember when you're doing this is that your day book is used for items sold on credit. If it were your purchase day book, that means you've bought goods on credit, okay? But everything you're recording is based on credit terms, okay? So I've got my customers, I've got my invoice number, everything that you'd see in a normal day book. The important bit is this bit at bottom, because it's the total amounts that are posted to the general ledger accounts. Okay, so these are posted to your general ledger. Okay, that's really important. The totals amounts, these ones, are the ones that are then individually posted to your customer accounts. Okay, so here's a little test for you. Let's deal with sales first. What side of the account or sales, are we going to tell you answer then, recorded? Is it the debit or the credit? Excellent. Okay, so you credit your sales for clothes, you credit your sales fabrics. What about the VAT then? What did I say earlier about VAT? Excellent. It goes on the same side, so it's a credit, which means that in your trade receivables control account or your sales ledger control account, the total will be a debit. Yeah, we all okay with that? What you need to remember is that whatever side of the sales ledger control account or trade receivables control account, whatever they want to call it, whatever side it goes on that side in the individual accounts as well. Okay, really important that. So if it's debited in sales ledger control account, it's also debited in your customer account. If it's your sales returns daybook, which would be a credit in the sales ledger control account, it's a credit in your customer account. Okay, so let's have a look at entering it in then. Okay, so remember when you're posting it to the general ledger account, which are these accounts, it's the date of the end of the month. Okay, so you've got 31st of August. Just put in details of sales daybook, and for sales close, it's 1106.32. Okay. Then we've got sales fabrics, so 31st of August, sales daybook, 581.41. Okay. And then you've got your VAT, 337.54, sales daybook, 31st at 8. Okay, perfect. We're doing well. However, accounts don't balance. So what we need to do is we need to enter the total into the sales ledger control account. Okay, and as you can see, everything in these accounts at the end of the month because it's all the transactions for the month. Okay. Are you okay with that? Yeah, you can remember it now from your foundation level. Yep, excellent. Okay, so let's move on to the subsidiary ledgers then. So in your customer accounts, it's the total that's going on the same side as you've entered it into the control account. Now remember with this, and this is important for this exam and for doing your assignments, in the individual accounts, it's entered in at the date of the transaction in date order. Okay, so you've got the first invoice for G Hall, yeah, which were dated 4th of August. So you've got 4th of August, just going to say sales daybook, and the total was 421.14. Okay. The next one was H. Lewis, which is 11th of the 8th, sales daybook, 51074. Then you've got I. Harris, which is 18th of the 8th, sales daybook, 38587. You've got H. Lewis again on the 26th of the 8th. Again, you can see I'm doing it in date order, 31182. And then you've got finally K. Khan's account, which is the 27th of the 8th, sales daybook, and the amount is 395.70. Okay, so we've entered in all the invoices. So we've entered in the totals into main ledger accounts, we've entered the individual transactions into the subsidiary accounts. Okay, so we're doing good. We're doing good. However, there's been a couple of items returned. Okay, so on this one, I've left out the VAT. So I've given you the totals and I've left out the VAT. Okay, and the reason why I've done that is I want you to work out what the VAT should be. Because a lot of people want to divide it by 5. I don't know why. But when the amount's given to you and it's got VAT in it, it's the total amount, you need to divide it by 6 to work out the VAT. So 48 divided by 6 gives me £8. Okay, 144 divided by 6 gives me £24. Okay, now this is an analysed returns daybook. I know that these are for sales returns for close. Okay, and the reason why I know that is because if I look at G Hall's account on the sales daybook, yeah, he only bought close from me. Okay, and then if I look at Lewis's account, it's got to be closed because the invoice after that is dated the 26th of August, and the credit note on this one is the 13th of August. Yeah, in the exam it is an English exam, so it will be at 20% unless it says things like it's exempt or it's zero. Okay, so it's what they're going to do is it's normally at 20%. All right, so yes, it's RTFQ, read the question, okay, because it will be in the data. It might say ignore that, okay, which is fine, we just ignore it. Okay, so we've got £40. So remember your amount minus your VAT, and then you've got amount minus your VAT, and then we're just going to total it up. Okay, I'm just checking my numbers because I've wrote this and it's been a long day. Okay, so we're going to enter it now into daybook. You could have a returns daybook. You've got one for sales returns fabric. I'm just going to put it into one. So which side of the sales returns account does the sales returns go? So which side are we going to post this 160? Use your pearls if you get stuck. It's going to be opposite side, isn't it? Excellent. So in your sales returns account, we're going to debit it 160, and it's going to be your sales returns daybook 31st of August. Okay. What about your VAT then? What side? Oh, you're a good group, you lot. Excellent. Same side, 32. So what side is the total going to go on in the sales ledger control account? Excellentio. Keeps popping up this box. I don't know if you all can see it. 192. Excellent. Perfect. Okay. Your double entries all coming back to you now. You need to know this for your assignment 1. Okay. So, what side are we going to enter the total figures on then in your subsidiary accounts? Okay. Remember, whatever side it goes on in the control account, it goes on in the subsidiary account. Don't worry, Kirsty, we can make as many mistakes as we want for the next few weeks, but when you sit your exam, you'll know it. Yeah? Perfect. Okay. So in your accounts, it's going to go on the credit side. It's going to go on the side that we've put it on in the sales ledger control account. Okay. So we've got 6th of August, sales returns daybook, 48. 13th of August, sales returns daybook, 144. Okay. Remember, in your subsidiary accounts, we're not interested in double entry because it's all been done in main ledger. All this is to show us how much each individual customer owes us. Okay. Everybody okay with that? So if it was purchase daybook, yeah, you'd be debiting your purchase, debiting your VAT, crediting your purchase ledger control account, and so on. Works exactly the same. Okay then. The next one is your discounts allowed daybook, also known as your prompt payment discount. Okay. Discounts allowed, and I'm only doing the allowed daybook, I'm not doing the received one because obviously it's just going to be the opposite entry. The discounts allowed daybook is when we've given our customers extra discount for paying us early. Okay, so these have got to be your credit customers. So if your credit customers have paid you, yeah, they've paid you early, because you wouldn't give them discount unless, or you wouldn't have to record discount if they paid you cash. Okay, So a discount allowed means that we've allowed them extra discount because they've paid us early. And it's an expense, which means that the net amount and the VAT go on what side? It's an expense. Excellent. So we're going to debit the account. So the total figure would go in which account? We know it's going to be a credit entry, but in which account? So this is discount that we've given our credit customers. So which account would it go in? Where have we just entered the sales daybook total? Brilliant, Kirsty. Yeah, it's going in the sales ledger control account because we've given the customers the discount. If it were discounts received, if this what discounts received daybook, it would go in the purchase ledger control account. Okay? So just think very, very carefully who's getting the discount. Is it the customer or has the supplier given it us? If we're getting it, then that's brilliant. It's a credit. If we're giving it a customer, it's a debit, it's an expense. Okay? And we've got to reduce how much they owe us. Okay, so we're going to post these totals. So the net is going to the discount allowed. The VAT is going to the VAT account. And the total is going to the sales ledger control account as a credit entry. Okay, so let's enter it in. So we've got end of month, 30th of September. Discount allowed daybook. Can't write tonight. Which is 26.55, I believe. The VAT 30th at 9, discount allow daybook, £5.31. And the total then is credited, and the reason why it's credited, I keep wanting to just write book, is because by crediting it, you would reduce the amount that they owe us. Because remember, a customer, so if they owed us £2,000, for instance, by crediting that account with the discount, it reduces the amount that they owe us. Okay? So just take care with that because discounts allowed and received were always a tricky one when it comes to the foundation level. So think about what we can do when we get to advanced level, which is what you're on now. We can make it a little bit more tricky. Okay. Everybody okay with that? So in your individual accounts, remember, it would be the total amount, okay, that would be credited in each of your customer accounts. Okay. Okay then, so balancing off the accounts. Now, this is really important, and it's important for assignment 1, but it's also important for the exam, because the examiner might say to you, balance off the accounts. And I know what's happening with some students is that they're seeing that either the accounts balance because the debits and the credits equal each other, so and they're not balancing it off. Okay, if the examiner says balance the account off, balance it off. All right, it's really important. I don't care whether there's 20 transactions in it or there's one. Okay, balance it off. So we're just going to go through balancing off an account that's got more than one transaction in. That's the first one. Okay. And the first thing you've got to do is total up the highest side. Well, I know straight away that the debit side's the highest side. Okay. Now you can check my calculations because obviously you can balance it off at the same time. But I believe that the debit side totals 3020. Okay. You need to make sure that you enter that total onto the credit side as well, because remember, both sides have got to balance. Okay? Then what you've got to do is the lowest side you've got to make it balance to this figure. And the reason why we're doing that is because we want to know how much this customer actually owes us. They don't owe us 3,020 because there's some credit notes on credit side. So we need to work out how much they actually owe us. So the date is usually the end of the month unless the examiner states otherwise. And the details is balance carried down. Okay? That means that this is the amount that we're going to carry down to next month. And the difference between the 3020 minus the 90 minus the 30 minus the 45 minus the 58 gives me 2797. Okay? I can't leave it on that side because it looks like it's a liability. So what I have to do is I have to bring it down. And this is now the 1st of September. And it's balance brought down. And I always remember this as bringing baby downstairs, and it goes below the total figure. And the amount is 2797. Okay? So what you've done is you've balanced it off, you've worked out your balancing figure, and then you've brought it down onto the opposite side. Now, in the exam, the examiner may say to you, calculate the balance carried down. Okay? That means they just want you to stop once you've got to this figure. So once you've got your total figures and you've worked out your carried down figure, they want you to stop. Okay? So make sure you don't bring the balance down. You would be able to. The boxes will be open for you to type in. But the minute you do that, you've read the question incorrectly and you're going to be penalised because you've gone above and beyond what the examiner said. Because remember, being an accountant is not just about being good with your calculator. You've got to be able to read instructions. You've got to be able to write reports. You've got to be able to explain things. So we do test that you are careful with what you're doing. Okay. Is everybody okay with balancing off an account? We're going to balance off one more in a second, but is everybody okay with that one? Yeah? Fantastic. Okay. This one then, this is a typical question where the examiner asks you to balance it off and everybody leaves it. Okay? And I get why everybody leaves it, because in real world I could just go like that and double underline it. And I know that my balance brought down at 1st of September is 10,000 quid. Okay? But if they do say balance it off, please balance it off. Okay? Now, it's quite easy because all you're doing with this one is, let me just get my pen back on, is doing exactly the same as what you've just done. Okay? So you're totaling off your highest side. Okay? You put in the total figure on both sides. Don't do what I've just nearly done as well. Don't leave a zero off because you'll lose marks. So on the 31st of August, my balance carried down is going to be the difference between what's on credit side, which is nothing, and 10,000. So it's going to be 10,000, which tells me on the 1st of September, my balance brought down is £10,000. Okay? Now you'll see on assignment 1, I think it might be drawings or capital account or both of them. There might not be any other transactions in it except a balance brought down figure like that. If it says balance it off, okay? If, for instance, I'm just going to remove all that pen. Okay? If, for instance, I'd got £10,000 in here and it said disposal, I don't know, put 31st of August, yeah, and it says balance it off, what I'd expect to see is that I wouldn't expect to see balance carried down 0, balance brought down 0. If both sides balance off because they equal each other, I'd expect you to be able to balance it off, showing you 10,000, but do not show me the balance brought down and the balance carried down, because I don't need to see it. Okay, so that's just another trick that you've got to be careful of. All right, because you would never see in a set of accounts balance brought down 0. You just wouldn't. There won't be anything there. Okay. Is everybody okay? Are you all still with me? You've not fell asleep? Ooh. Yeah, excellent. Not yet. Yeah, well, we're on to the very last bit now. So this last bit is a bit of I won't say it's extreme because you need to know it, but it brings together everything we've just talked about, okay? So what we're going to do is we're literally going to create the trial balance. We're going to put it on debit and credit side, and then from there I'm going to show you how it goes into the profit and loss and into the statement of financial position. I don't expect you to remember it all, okay? But what I am doing is I'm taking your knowledge that little bit further because it's logical after what we've done tonight, and it'll get you ready for this unit when you come to do the extended trial balance and for the next unit, okay? And you've got me to listen to all the way through your studies till you complete advanced bookkeeping and final accounts prep. Okay. So let's have a look at the trial balance then, okay? So we're going to use pills, okay? So what I'm going to do is we're going to read it out, and all I want you to do is type in DRC. Is it a debit or a credit? So sales, debit or credit? Excellent. Purchases? Excellent. Carriage inwards and carriage outwards. Carriage inwards, carriage outwards are debits, the expenses to the business, okay? Because your carriage inwards is money that you have to pay out for receiving goods to come in. Carriage outwards is what it costs you to send goods to customers, okay? Capital. Excellent. Drawings. Excellent. Sales returns. Excellent. Purchase returns. Brilliant. Irrecoverable debts. You might not have heard of this. Well, you have. You've done it at level 2. Excellent. What a team. Motor vehicle. Brilliant. Remember what I said on statement of financial position, accumulated depreciation. So if your motor vehicle cost you 18,000, you've got to take off the accumulated depreciation, which would be a what? Can't be a debit, should increase it. Excellent. Office equipment. Brilliant. Accumulated depreciation for office equipment. Fantastico. Wages. Light and heat. Brilliant. VAT that we owe to Inland Revenue. Perfect. Bank. When it says bank debit balance, it is a debit balance, okay? We're not trying to trip you up. This is the one that will give you debit. Discounts allowed. Excellent. Debit. It's an expense. Discounts received then. Credit entry. Brilliant. And it's a credit entry because it's other revenues, okay? Depreciation. So this is money that we're writing off an asset. Brilliant. Debit. Petty cash. Can only be one. Fantastic. Inventory. Fantastic. Sales ledger control account. So this is people that owe you money. Brilliant. Purchase ledger control account. Excellent. Closing inventory. This is a tricky one, this one. Ah, nice one. Nice one, Kit. Well done, you guys. Brilliant, both of them. Okay, so when you total it up, they're both balanced to 151,565. That's fantastic. I am so impressed. That's brilliant. Okay, but now what we're going to do is I'm going to use that trial balance and we're going to just create the statement of profit and loss and statement of financial position, just so you can see again how it all comes together. So the figures in bold are the ones that go into the statement of profit and loss. Because remember, this is all income and expenditure. So you've got your sales, which are entered into the credit side. So remember that this I suppose this out of column could be classed as a credit because obviously you're moving stuff over there. And then you've got your sales returns. You would deduct them from each other to be able to get your net amount. Okay. Then you've got your opening inventory. So this is the stock that you started with. So this is your opening inventory. Okay. Which is your 11310. Because I've got 3 columns, my purchases, okay, come on the inside column because I'm going to do a subtotal. So your purchases minus your purchase returns, okay, gives me my net purchases. Then I've got my carriage inwards. Then I'm taking off my closing inventory. Okay, and that gives me a total cost of goods sold or cost of sales as 373.82. Okay, my net sales of 78939 is then the cost of sales is then deducted from there to give my gross profit. Okay, you're adding on your discount received because that's classed as other income to give you then an adjusted profit figure of 424.52. Okay. So that's your top part, basically, of your profit and loss, because a business will always look at gaining a gross profit figure and then a net profit figure. All right. Is everybody okay and clear so far? Yep. Fantastic. Yeah, brilliant. Please, like I said, stop me if I go too fast because like I say, I get excited. Then I've got carriage outwards. So this is the carriage it's cost me to send goods to my customers, which is an expense. Then I've got my irrecoverable debt. So that's a customer that can no longer pay me anymore. I've got my wages, my light and heat, discounts allowed, my depreciation, and that gives me a total expenses of 16730. Take that off your adjusted gross profit figure. So you're taking, so it's these two, you're taking it off that to give me a gross net profit for the year, also known as net profit, of 25722. Okay. So that's your profit and loss complete, okay? You've got to remember this profit figure because we're going to need that as we come on to a statement of financial position, okay? But that's basically what you're trying to get to. There's going to be other things in advanced bookkeeping, like to be able to decide what goes in your profit and loss, you're going to have made adjustments before it, okay? But we'll do that as we move along with your studies. This is just a refresher to get you back into studying mode and get you back motivated, ready for your exam. Now we're going to complete the statement of financial position. Okay, so the ones highlighted in bold are the figures that go into the statement of financial position. So you're going to start with the cost of your motor vehicle. Then take off your accumulated depreciation. You will be calculating that, okay, for your exam to be able to know what then the net book value is or carrying amount. So your cost minus your accumulated depreciation equals your net book value or carrying amount. Then you've got office equipment, okay, of 12,500. Minus your accumulated depreciation gives you your net book value, and then you total up your three columns. Okay, so you're just adding together your two costs, your two accumulated depreciations, and your two net book values. Then we've got your inventory, and remember your inventory comes from, don't forget, your profit and loss, your closing inventory on your profit and loss. So you're going to debit the inventory with 12,500. It's an asset to you. It's got value. Then you've got your trade receivables, okay, which is an asset 'cause they owe you money. You've got money at the bank, which is a nice thing, and then you've got cash in your petty cash tin. Okay, this gives me a total of 46216. So that's my total current assets. Then you've got your current liabilities. So you've got your purchase ledger control account. You've got money that you owe to the VAT man, okay, which gives me total net liabilities of 20491. Remember then that your current assets minus your current liabilities equals your net current assets. So you minus those two to get your 25725. We've then got no long-term liabilities, but if we did, that could be bank loan. So then your total non-current assets plus your net assets equals your total net assets. Okay, like I said, if you had like a bank loan, any long-term liabilities, you would deduct that. Okay, so you've now got 45995. Okay, then we've got to do the finance by section. So remember, this is the figure that we're trying to now balance to. So what we start with is we've got the capital figure of 22823. Your profit has come from the profit and loss account, which is 25722. Take off your drawings, which then equals 45995. Okay, so those two equal each other, and that's what we're wanting. We want to know that when we've completed the financial statements, everything balances and it's perfect. Okay, and that's what you're trying to work to. So that's your overall I suppose goal. That's what we're trying to do. We're trying to say, right, all these transactions have been entered, I've done my trial balance, I've worked my profit and loss out, and my financial statement now balances and tells me where the business is at. Okay, so we've covered a hell of a lot tonight. I hope you've managed to keep up with me, okay, because like I said, I wanted to put this last bit in so that it just gelled it all together. Okay, so when you do the first assignment, I'm not expecting you to, there's no profit and loss or statement of financial position to doing it, so don't worry about it. But everything else that we've covered will be tested within that first assignment. Okay, so has anybody got any questions whatsoever? Now was the time to ask me, otherwise you're going to have to wait and ask me tomorrow. Few people typing, so I'll wait. How do we remember what goes where on the statement of finance? I think you mean statement of profit and loss and statement of financial position. Right, so if you think about you will have some pro forma in exam. Don't forget you're typing numbers in. Okay, so this is, like I said, this is an extreme case. But what you've got to remember is that on the statement of profit and loss, it's income and expenditure. Okay, so when you look back, everything that I've picked out on the profit and loss, yeah, is income, and expenditure. Okay, when you go on to the statement of financial position, like I said to you earlier, it's items that the business owns, is owed, and owes to others. Okay, so when you look at a profit and loss, you should be a trial balance, for instance. I could go down this trial balance and think, right, well, that's to do with income, that's to do with expenditure, that's what we owe, that's what we've the owners had, so that's what we've owed the owner. That is the owner owns it. The owner owns it. The owner owes it. The owner is owed it from the bank. The owner is owed it from the petty cash tin. Owed it from the customer. Owes it to the supplier, and the customer owns it. Okay, so you can go down. It's very, very simple. Okay, but you've got to think about it simply. So like I said, by just going down and saying owns it, owes it, is owed it, makes it simple. All right. If you try and work it out, yeah, it will always go in that order. Okay. And there is a different way of doing it when you move on with your studies, but you will be given a pro forma. It's not just a blank piece of paper because you're doing everything online. Okay, so don't panic too much about it. If assets and liabilities, absolutely perfect. Yep, absolutely spot on. Okay. Anybody got any other questions? Ask away, don't be shy. Somebody else might be thinking it. Why is the closing inventory both credit and debit? Right, okay. So you're going to see different types of exam questions, okay? On this one, I've shown the closing inventory as a debit and a credit because the credit is coming out, it's coming off the statement of profit and loss, and it's going into the statement of financial position, all right? You'll see some exam questions where the closing inventory is basically a note underneath, and you've got to make the adjustment, so it's not in the trial balance at all. Okay, so you'll see as you go on that there's different ways of testing it, but all you've got to remember is that the credit is out of the profit and loss and into the balance sheet. Okay, so when you come to do an extended trial balance, my students always remembered it as that these transactions literally go side by side on extended trial balance. But it's because I've put it in there to show where it goes into the financial statements. You'll see some questions where it's only a note at the bottom and you've got to make an adjustment off your own back. No problem. Anybody got any other questions? Like I say, ask away. Otherwise, you'll all be wanting I think you just all want to go for your tea and a glass of wine, or a pint of lager or something. No problem. Okay then, so if there's no more questions, my email address is sam.h@premiertraining.co.uk. If you phone the office, they'll put you through to me. You can speak to me whenever you need me. If you need to speak to me on an evening, please let me know and I can arrange a call. Because, like I said, I normally only do 9 to 5, Monday to Friday. But please, don't sit there dwelling on anything. I do want you to now try assignment 1 and get that into me for marking. And I will get that back to you as soon as possible. But I really hope you've enjoyed tonight and I hope you've got a lot from it. And then next week we'll obviously be getting ready for assignment 2. Okay, so please make sure I've marked it and sent it back to you before next Wednesday's lesson. Okay, so if you've got no more questions, then I will bid you a good night and enjoy the rest of your evening. And if you want me, I will be back tomorrow in the office, and give me a call or drop me an email. Okay, it's been an absolute pleasure. Well done, everybody. You've been brilliant, and I will get this webinar or this lesson sent out to you on email tomorrow. Okay, so good night, everybody, and speak to you later.